Hey, what's up, everybody? All right, so I wanted to break down UPS for you guys. And yes, the message is already sent out. So by the time you guys get this, you guys would have read the message already. Real quick, UPS, it's a very strong stock and it made it through COVID. Okay, through COVID because it was a stay at home thing. And, people were ordering online. So there was tons of shipping and handling, for UPS, a lot of deliveries everywhere. So the sales and the demand for UPS increased a very good amount, and it shows in the chart as well. We ended up breaking from this level. This here, let me go on the weekly time frame. Okay, so here, this is the range that we were trading at before COVID hit. This huge range. So we ended up breaking this like 125, right? So because we broke the 125, we ended up hitting this rally. So it's a rally base rally. Okay, and the demand for it, like I said, became very, very high, and everybody was at home and, of course, doing a lot of shipping. So I guess the question now is kind of like, where are we going, and what is the best way to trade this stock? And like I said, is not to be biased, but just remember that the higher it is, the more reward you have for the put side, and the risk is very low because now the risk becomes the stop of 219.59, and you can load up on some puts maybe for like the 200 level, and then the 170, the 175, the 180 level, things like that, because you're gonna trail it all the way to the downside. uh, but again, this is a very strong stock, and we don't know when it's gonna drop, but I'm sure a lot of people are out there who are ready and willing to grab puts on this thing because it's just way overextended on on every time frame, on every indicator is just saying it's super high. So it has attention of a lot of people, and also think of it this way, that not every investor wants to continue to start buying around these 210s and 220 levels, but it definitely can still continue. So don't take that away from this stock. So looking at this weekly time frame, right? Hold on. This weekly time frame, we have these candles right here that are pressing in. Okay, so you see this here. So right now it almost looks like kind of like a little flag here, but then the week is not over. Today is still the 25th. We got all the way to the 28th. So we can definitely create a nice little pennant in here. And again, UPS doesn't have to drop in the next couple of days, but it can. But this candle will be the deciding factor if this is going to be like a nice pennant. And remember that just because we have a nice strong green candle doesn't make this a bullish pennant. Okay, a pennant can go either way. So you got to be ready for both sides on this name. Okay, but remember the strength behind it, but also the amount of puts that can be going for the bias direction. So with that, I want to make sure I take these off first, just so it takes away from that. Looking at the 4-hour time frame, we have a nice squeeze right here, right? And by squeeze, what I mean is that you're seeing a lot of a lot of sellers come in at some of these levels. Okay, so look, this is where we kind of first started. We saw some sellers here at this 215 all the way to that 216. Okay, here we went as high as there, and we couldn't really trend any further right above, except here we gapped up, and again we came down here again, here again, right? And then today it showed some very strong rejection, of course with the market being down, and then we didn't really get any buyers, but there's increase in the volume here. Okay, there's increase yesterday right at closing, and then today there's an increase in volume towards the closing as well, giving you a bunch of selling pressure. Okay, so take note of that, but also now know that we have to take note of this 211 all the way to this 210, and I'm using this wick right here. The pre-market here got bought up and we stayed over the 211. So this level became a support. Okay, so it confirmed here, and now we're right at that same spot again. Okay, all right. So knowing that, it's one or two things that's gonna happen with this stock. We're either gonna break down, right? We're gonna come down like this and take a snap back right at the bottom, potentially going like this. So we won't know what the full direction is gonna be probably until Thursday or Friday. So we won't know where we're going. Now, if tomorrow we do break down and we stay red, we come down here for sure. I think it'll catch a lot of attention, which at that point you can definitely keep swinging into the next few days. So that's why whenever you grab a play like this, what you want to do is you want to grab some weekly contracts, of course, to trade it to the put side, but then also be ready that you use some of those profits to grab a put swing position. The swing position and the contracts are already in the sent in that message, so you guys can take a look at what you're going to be looking at. And I think the biggest one that I would rather choose is the 18th, and let me show you why. The 18th, if you come down right here, there's tons of open interest for the 160s all the way to the 190s. Now, I'm not saying it's going to go down there by June 18th, but that catches my attention. The 210 has 2K, 3K, 2K here, and then the rest here, they're pretty much loaded up, right? And then for the call side, we only have this 220 and this 230, but then we have tons of volume on this one with one open interest here. So it doesn't make sense for the call side. It makes more sense for the put side for the June 18th. So again, I'm not biased on this. I just feel like it has more reward playing the put side versus playing the call side, because if you're playing the call side, you can't really trail it as much, and you can't really say that there's some history behind it. All you're doing is you're grabbing some breakout levels, and you can only day trade and make a few bucks here and there. But towards the put side, you can actually swing it and continue to follow each level down to the bottom. So looking at this candle body here, this is like your 205 area, your 205. What is this here? Yeah, like 205.80, 206 if you just want to round it off. You come down here. These are your targets: 204.60, 203.60, 201, 201.78, and then you have like 200. So you got a bunch of levels down here that we can potentially hit. But like I said, we're just gonna have to wait to see where it's gonna go. So make sure you guys set your alerts between the 211 and 210. And we're gonna see how it reacts here. And then again, if we end up pushing here all the way to the 215, I don't think it's worth trading from 211 to 215 because anything can happen in between then. So I would rather go long over that 215 and 216. Okay, if we can build candle bodies up, for sure we can definitely push up, and start making all-time highs again. So watch out for either one of these plays, either to the top or to the downside. If you want to catch an entry for the short side at the rejection of 215, you can, but just remember that you just got to take profit on the way down and don't let it go red. So hopefully this kind of gives you guys an idea as to like what that breakdown message that I sent, and can give you some potential good plays intraday, even intraday or swing trade into the next few days. So um, the message for the open position won't be sent until tomorrow or until those alerts hit. So make sure to do your own due diligence, set those alerts, and if you like this play, when the alerts hit, by all means take the trade. Don't wait for anybody to call it. You guys are traders, and you guys can definitely push the button, pull the trigger. So with that being said, I hope that we can make some good profits off UPS, and you know, let's stay green. All right, guys. Hopefully, you guys are enjoying these videos, and you know, we look forward to providing more of the breakdowns, recaps, and before things even happen. So, good luck, guys, and stay green.